Hello, this is Alex from DiamondArm. First off, read this disclaimer carefully. We will look at a very interesting company in this episode, and in a very interesting theme I call Cordless electricity. You can see that the average performance of the stocks in this theme is quite significantly above, massively outperforming here the S&P 500. So it's a very powerful trend for sure. In this video, we will specifically look at the company called Albemarle. Making the world safe and sustainable by powering the potential of people. With a history that extends back to 1887, to date Albemarle is a leading global producer of lithium, bromine and catalyst solutions, which are used in batteries. We think beyond business as usual to power the potential of companies in many of the world's largest and most critical industries, such as energy, electronics, and transportation. We actively pursue a sustainable approach to managing our diverse global footprint of world-class resources. In conjunction with our highly experienced and talented global teams, our deep-seated values, and our collaborative customer relationships, we create value-added and performance-based solutions that enable a safer and more sustainable future. Here are the businesses, and of course they have, corporate social responsibility policies. Okay, now let's first look at the seasonality of the stock. Here you can see the percentage of months in which Albemarle closed higher than it opened between 2001 and 2020. August historically is one of those months, it frequently at least closes higher. The average performance for the month is however usually a loss. You can see that there is some clear seasonality, strong here towards summer, and then strong here towards the later part of the year. Let's look at it against the S&P 500, like that. Then we go, so here you can see that there is certainly some strengthening happening here towards the later part of the year, especially into November, which is quite interesting. Okay, so that's the seasonality. Now let's look at the charts. Now we are literally looking at all the history we have here with Albemarle. It went public here way back in 1994. Within this entire time frame, we do have a 1,314% gain. Obviously that's big, but some active management could lead to a bigger move. If you go all the way up here, that's actually approaching 2,000%. We can quite clearly see that there are some major bull market and bear market cycles. Interestingly, even though we do have, of course, the bear market during the financial crisis, Albemarle had, a strong bull market, but actually had a bear market here that where it went down 44%. Then it had its own bull market after that, which was extremely strong actually. This bull market here was a whopping 250%. Then we crash, and here have a very deep bear market here of minus 66%. So there's already been a very massive correction here of the price. So that's the key thing we can see here with Albemarle. It moves in very big cycles, and they seem to be independent also of the major global bull and bear markets. That opens up a lot of opportunities, but also means that this is definitively one of those stocks you definitively want to let the trend be your friend here. When we look at the RSI, you can see that it doesn't like to be overbought or oversold, but it can be overbought for multiple weeks. As we can see, that's happened multiple times in the past. And there's an overall rise here in the accumulation distribution line, which is especially interesting given that there's been these major cycle patterns. It's actually a very strong sign that even though we are quite far away from these highs, it hasn't had a major impact here on actual purchasing. There's a minus 42% negative correlation with S&P 500, so that's a very interesting relationship for sure. Okay, so when we look at resistance levels here, one of the key things that jumps up out of the chart is that the red 200-week moving average, here, 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 and here, it's historically important, which means that it matters. Test, fail, test, fail, test, fail. You can see here 3 times fail, and it was a disaster. I mean, it led to a very sharp sell-off. We have had 3 tests now of the 200-week. So there definitively is added risk at this moment. There's a high risk now of a correction, unless we are able to close above the 200-week fast. That's especially because of this, because this is exactly the kind of trading pattern that algorithms look at. You see that there's a clear parallel between these patterns and this. Here I have a test and a long pullback, test, long pullback, then we try again, and then a second attempt very short after. I mean, these are very similar patterns. Here it failed, and it was a major bearish opportunity, short selling opportunity. The big question here is that if we do see continued weakness, this could be actually a very good bearish short, at least temporary. So this is a do or die situation here for the bulls. Very critical indeed. Now let's look at the daily data points. You could certainly make the case that this looks like a rounding bottom information. The thing about a rounding bottom is that they are quite erratic when it comes to price, because they basically are a picture of a major battle between the bulls and the bears. So it will be up, down, up, down, up, down. So even if we do get a firm rejection of the 200-week moving average, which could lead to a sizable pullback, that would be in line with forming a rounding bottom pattern. Actually, we could actually go way down the test and gyrate, and over years form a rounding bottom. At least that is one of the potential patterns that could play itself out. You can see here that it does pay a very regular dividend, which means that you are actually rewarded for holding on to Albemarle. And we will look at the dividend soon. So we are above quite a few of the moving averages. It is possible for the bulls to break out and really just power through here. The RSI is not like overbought. So the bulls still can pull it off. It is just that it is critical. Now it is really do or die. Yeah, so definitively critical times here. Okay, let's look at some other metrics. So we go here and we can see that if there are options on Albemarle and it is shortable, that opens up very interesting opportunities. You can see here these trend lines, and it's broken out above the trend lines. Here's the performance, pretty good performance. What I like to look at is the analyst price target relative to the current stock price. You can see that the current stock price here is $91.09. The analyst price target, unfortunately, is $78.66, which is significantly above the current price, which means that the analysts, they think that the fair price for Albemarle is 14-ish% below the current price, so that adds to the case for the bears. Saks.com, they have a number 3 hold C value score, which is not that bad, but they do have an F growth score and T momentum. So the industry is in the top 49%, nothing special about that. And you can see that the dividend is 1.7%, which is a decent dividend. Market cap approaching $10 billion US, so definitively a big company. To sum up my take here on Albemarle, we do have quite a few bearish items on the menu here, which is building the bearish case. We do have the resistance level, a very clear pattern that is repeating itself. On top of it, you now have the analyst turning against Albemarle because of the price relative to the actual economics, the financials of the company. So it's a very dicey situation. It is possible for the bulls to pull it off. It is just that it is now urgent. So it's really like they have to pull it off now, have that breakout, preferably show support also. Turn the resistance level to a support level, to the 200-week especially. So it's critical times here for Albemarle. Though looking long term, I'm very bullish on the theme. So don't fight the trend, and may the trend be with you.